All right. With bonus depreciation being reduced to 40% next year and 20% the year after that, then ending in 2027, what are the alternatives for investors who've been using bonus depreciation through real estate purchases to reduce taxable income?
Well, that's where we're going to have to do some planning, assuming that it holds this course, which, we don't know, but historically it has not. We've always had bonus depreciation. So if history means anything, we'll probably get some form of bonus depreciation back. But if we don't, we can look at maybe contributions to nonprofits or something like that. Look at other business expenses going along with your business. So it's kind of sad if we do lose this because it's been such a great run. We can't promise you that they're going to come back with something, but like I said, historically, we've had at least 50% for some time.
Yeah, and here's the thing to remember is that when you're doing bonus depreciation, the first step before you get there is you're doing a cost segregation. And all that means is that typically when you walk into let's say it's a single family rental, if you just went to a regular accountant, they're going to say, oh, that's 27.5-year property. That is true if you want it to be. Like the IRS will let you, that's actually called an impermissible method, but the IRS allows you to do it because you're writing things off over their longest life of all the property in there. If I actually get an engineering study, it's going to say, hey, some of this property is 5-year. The appliances are 7-year, like furniture and stuff like that, 7-year. Land improvements are 15 years. Carpet is 5-year. And the walls, the structure itself are 27.5. So you're breaking it down. It's usually about 60 to 70% is the structure and 40%, 30 to 40% is those other items. That's what we're talking about. Those other items we can write off over 5, 7, or 15 years, or we could choose to bonus them. And the bonus is based on the year they were put in service. So if I do this on a property that I bought in 2021, it's 100%, even if I do it this year where bonus depreciation is at 60%. 60%, right? Yeah. So I can still write off 100% bonus depreciation on a property that I've held. If I buy a property now I'm looking at it and going, okay, that 5-year property, I'm still writing it off over 5 years, but I can bonus 60% of it into year one. So if I was going to write off $100,000 over 5 years, I would get a $60,000 deduction, 60% in year one. And then I'd have 40,000 that I'm spreading it out over 5 years. So it's not like it just disappeared. And I'm looking at, somebody says, doesn't a cost seg cost $5,000 plus? Thomas, no, they start right around 1,500 and they go up depending on the type of property and who you're using. We use Cost Seg Authority. They've just done a great job for us. How many of you guys have used Cost Seg Authority for doing your cost segs? We refer to them as a CPA firm that all they do is R&D credits and cost seg, and they do a great job. There's a few people. Give me a thumbs up or a heart if you liked working with Cost Seg Authority. I just want to see if there's anybody out there that's using.
They're coming now.
Yeah, they're coming now. There's a few of you guys. There we go.
Yeah.
So it's more than a handful. It's actually quite a few. So as we're going through, yes, they've taken away some of the serious sauce. It's juice, right? But it's not gone. You're still writing things off much faster. Somebody says, I just had my first call with them yesterday and they were great. I've been working with Eric Oliver and those guys for years. They just do a solid job. So we just like working with them. I like working with experts. So this is what they do. Ding.
Free estimate too.
Free estimate. If you go through Anderson, that's great. And they'll get to there fast. So we'll actually send you a link if you want. So that way they know, so they're not charging you for stuff. But Patty will get it to you. I think it's aba.link/CSA for Cost Seg Authority. And Juan says, I've used Cost Seg Authority on 3 properties. Approximate cost and how much did it save you? If you're okay telling me one on a chat, it's like I'm actually reading his chat. It's kind of fun. So you never know, right? Juan says, we'll see if the juice is worth the squeeze.
Quite a bit.
I want to know because I use a rule if it's 7 times what it costs. If I'm saving 7 times what it costs, I'm doing it, right? I want a dollar today, not a dollar in 5 years, or not a dollar in 25 years. I want that dollar today. It's worth a lot more. A dollar today is worth a lot more than a dollar in 25 years, 27 years.
Certainly.
Yeah. So anyway, he's just laughing. I won't press you. I won't twist your arm.
Oh,
Um,
there we go.
oh, he said, cost me $2,500 and saved me over 22,000.
Yeah.
There you go. Oh, that wasn't one. That was somebody else. But that's about right. That's what you're looking at. Okay, so it cost me, saved me more. And here's the thing. You just don't pull the trigger. It's not worth it. Juice has to be worth the squeeze. So you're able to go in there with your eyes open and say, here's what it's going to work out. And you got to look and say, what are you going to do with that loss? If I'm able to create a nice big fat loss, like in that particular case, I'd guesstimate you're probably getting $80,000 worth of depreciation. If it's just going to create a loss that I can't use that I'm just carrying forward, it may not be worth it. If it's going to offset a bunch of my other income, absolutely worth it. And that's why they look at what is it actually saving me, not what is it creating in terms of deduction. It's what is it actually saving me, and that's a factor of what's my tax bracket and how much of it can I use. So and then you're right. You can use some other strategies. One of the things I do is I donate properties that have been depreciated. So I've grabbed my houses. Patty has to deal with my shenanigans all the time. I think we've given away 5 or 6 houses where we buy them, depreciate them enough, and they're sitting around and they've appreciated in value. So you buy a house at 50, it's now worth 300. I might just give that to charity, right? And you're like, well, you give it to the American Red Cross. No, I'm going to give it to my charity where I'm actually running it, and it's for low to moderate income housing, and I'm going to get a big tax deduction that's actually worth more than the house. Like I'm writing it off twice. So I always look at, but now it's going to be charitable use for the rest of its existence, which I'm okay with that.
Nice.
I like stuff like that. So there's other ways. We'll get our little thinking caps on your situation, and we'll find ways to find you some other deductions. There's other ways to get there. We didn't always have bonus depreciation. We've been doing this for 25 years. There's always some strategies. Defined benefit plans, getting money into another entity, paying kids, paying other relatives, getting other people involved, creating other deductions as you're starting up other types of businesses that can then offset the type of taxable income you have, making more charitable donations. All those fall in those categories. And we're just looking at it to see whether or not it makes sense, So again, that's all you're doing is we call it the 3 rules of tax planning. The 3 rules are real simple. This is another Inglourious Bastards. If you reference,
You gotta watch it.
right? You got to watch it if you're gonna catch some of these, right? But you have 3 rules, right? Number 1 is, I can't do it that way. I'm gonna have to go this direction. Number 1 is calculate. Number 2 is calculate. And number 3 is calculate, right? So we're going
There
to
it is.
calculate and see whether it's worth it. If it makes sense, then we're going to do it. So
Success is just around the corner.
yeah. If you like this clip of Tax Tuesday, then I invite you to join the actual show. It's every other week, and you can ask your questions and get them answered live by myself and my team. Just click the link.